Let me now bring on board Mr. Pradeep Chaudhary, Chairman and Managing Director of State Bank of India. Mr. Chaudhary, good morning. Thank you for joining us. Mr. Chaudhary, the entire banking sector struggled to meet their FY13 credit growth projection set by Reserve Bank of India. What is your sense on the credit growth going forward for FY14?
I think firstly RBI should not prescribe targets for credit growth because much of our problems are due to a mindless chase of top line. But yes, this year we have concluded or you have ended with a 21% increase in the credit levels, and deposit growth has been about 15%.
Mr. Chaudhary, I'm warning the RBI held a pre-policy meeting with bankers as well. What was discussed and what were the points put forward by the bankers?
Yes, central bank, the governor himself did a summary of the macro situation and what are the challenges. Particularly the current account deficit is uppermost in his mind, and at this point how feasible it is to have a expansionary monetary policy. So the banks as a group, I think, said to RBI that a repo rate cut is just a signal but has no effect or impact on the real interest rates. So if the real interest rates are to be brought down, the only way to do that would be the CRR. And secondly, we thanked RBI for having increased the refinance window, particularly with the dollar export credit, which is right because today importers can borrow at interest rates like LIBOR plus 70 basis point or LIBOR plus 1%, whereas an exporter had to pay much more. So therefore, this export credit refinance to exporters at interest rate ranging from LIBOR plus 100 to 150 has been very welcome because RBI has made money available to the banks at LIBOR.
Mr. Chaudhary, how much rate easing are you expecting from Reserve Bank of India this year?
No, we cannot work with those indications, but if you ask about recommendations, I think a minimum rate cut of 100 basis point in CRR would be useful, otherwise the growth cannot be kick-started. And I would perhaps expect it to be staggered, 50 basis point in the first half and 50 basis point in the second half. But that's again a recommendation and a wish. The final decision is up to RBI.
Mr. Chaudhary, a lot is being spoken about the revival in corporate sentiment, but on the ground, are you seeing any signs of a pickup in corporate loan demand?
Yes, there has been slight revival of interest in some sectors like steel and metals and particularly textiles. But the sectors which depend on government or government agencies for eventual realization of their sale proceeds, like the construction sector or the road sector or the power sector or even the fertilizer sector, there people are a little more skeptical and are not yet committing fresh investments.
Mr. Chaudhary, State Bank of India saw a huge surge in retail loans in FY13. Can we expect more of the same in this financial year as well?
A retail portfolio, and 80% of that would be individual home loan mortgages. Because ever since we have brought down the home loan interest to 9.95 and have given wide publicity to this, I think there is renewed interest among all the home loan customers, existing and those who are even intending to buy new homes. So both are finding our proposition to be very useful and coming, and we expect a growth of about 30 to 35% in the home loan segment itself.
So what has the deposit growth been like in FY13, and will you be looking at tinkering with the deposit rates as well going forward?
Deposit growth has been 15%. This is after shedding about 3% of bulk deposits. Our bulk deposit percentage of 4.5, that has been reduced to 1. So only bulk deposits contracted earlier for longer period are the ones remaining. We would like to see a similar growth, but again deposit growth would be conditioned, and the rate of interest on deposits is positioned according to what we see is the demand. So if we see a surge in credit demand, maybe we would go more aggressive in deposit taking, and that applies to pricing in particular. But if the credit demand is muted, then the banks would be relatively relaxed in deposit mobilization.
What about your lending rates and your base rate? Can we expect change, or will it be possible only if RBI cuts rates?
So only a CRR cut could move it down, because already our base rate at 9.70 is very competitive. And what is more, our base rate is not a theoretical rate, but it is an actual rate, and we are lending at base rates or sub 10 to a large number of customers. So that has generated a lot of interest among our borrowing customers.
Right, so how much fund infusion are you expecting in FY14, and what's your requirement for this year?
It's too early to talk about that. We expect, let us close our books first. We expect a very good, robust internal accruals, something like 15,000 crores or thereabout. And we have got already 3,000 crores from government, so that strengthens our tier 1 ratio to something like 10% of the risk-weighted asset, which is very good. And after that, we'll take a call whether we need to go out and raise capital from the market, or the internal accruals themselves would be adequate. But even if we were to go out and raise capital in the market, that should not be very difficult, because the government holding in the bank currently is 13%, and so there is considerable headroom to increase the capital without disturbing the public sector character of the bank.
What is your outlook on asset quality, and do you think for Q4 you are likely to report a marked improvement in your asset quality? And what about your agri portfolio? Are you experiencing any stress on that?
In fact, that is the best story. Our March NPA numbers from the core banking, though they are subject to audit, are lower than the December numbers. So it has been very encouraging. Particularly our retail recovery has been a great success story. And agri, I have traveled extensively across the country in the last few weeks, and I find, except for some few pockets, the agri crop and the harvest is extremely good. I've seen it in the northern part, in the eastern part, in the central part, is extremely. In fact, agriculture, to my mind, would be one of the strong points of the economy. And we had dismantled the zonal offices, so that I think greatly hampered our retail recovery. Now that the zonal offices are back, they came back in November 11, and we have 18 months operations of these zonal offices. So the recovery effort and could be better organized, and it is showing results.
So Mr. Chaudhary, what's your outlook on margins as well going into the new fiscal?
I would expect the FY13 to end with about 3.70 plus, anything between 3.70 and 3.75. That is the domestic net interest margin, and that should continue. I'm not too sure about the outlook for overseas, the foreign office interest margin, because that would be a function of to the extent our offices can book long-term assets, because in the overseas book, the pricing on the short-term assets, the trade finance, is down to very low levels. It is ranging between LIBOR plus 50 basis points to LIBOR plus 100 basis points. So a bank, in order to have a high net interest income, has to look for long-term assets of good quality.
And finally, KFA, what is the way forward there? It appears that bankers have started moving meaningfully to recover the loans. How much do you hope to recover by selling KFA's assets?
See, I as a chairman do not get down to the nitty-gritty, that how many shares, which broker sold it, how did you sell it. So the broad direction from here, because it's a board level, we called up the loan and directed that all the assets should be put to recovery. So depending on the nature of the assets, some would take longer time to realize, some can be realized in quicker time. So the pledged shares, particularly those which are in the dematerialized form and when there are volumes, can be realized more easily. But we hold these shares as a trustee on behalf of the entire consortium. So after the sale proceeds are received, then the proceeds should be distributed among the bank. But the process is the same whether the borrower is Kingfisher or any other company. So nothing in particular I would like to see in this particular case.